Our India's central bank has cut interest rates for the second consecutive time on concerns that those tariffs from the US could threaten growth. The Reserve Bank slashing its key lending rate to 6% from 6.25% and trimming its forecast for growth. Ishan Garg tells us more from Delhi.
The Reserve Bank of India cutting its lending rate to banks for the second time this year comes as concerns about a global economic slowdown loom. India's central bank said American tariffs coming into effect could have a bearing on India's growth. The bank did not, however, quantify the exact impact it could have on the country's economy, but it did say that a challenging global environment is making things difficult for the world's most populous nation. Though India remains the world's fastest growing major economy, the RBI revised its projection of India's GDP growth to 6.5% in the current financial year. It's 0.2% lower than the bank's previous estimate of 6.7%. Governor Sanjay Malhotra said the bank is also changing its monetary policy stance from neutral to accommodative. Analysts believe this is crucial because it means the central bank is now open to reducing interest rates further, a move that could boost growth.
Of course, tariff has played on their minds. The global uncertainty has definitely had a role to play, maybe to expedite it by a couple of months. But this was anyways a cycle of a rate cut, which had commenced because our inflation numbers have come down from 4.2 to 4.
Analysts say the easing inflation could give the RBI more room to cut rates even further if the need arises. According to ICICI Bank, the RBI could reduce borrowing costs by as much as 1% in the next few months. Theoretically, this is something that would bring down the cost of borrowing for the average consumer in India. But some experts say that there may be little hope for respite in the near term.
Indian banking system has had a very, very bad track record in terms of passing on rate cuts to the end consumer. When rate hikes happen, they have a very swifter cycle of passing it to the consumer. But when it goes down, then the borrowers don't get the benefit in such small quantums.
The RBI says trade tensions and protectionism could also hurt the Indian rupee. The INR has already depreciated 1.2% since President Donald Trump announced sweeping tit-for-tat tariffs. It's why analysts say all eyes are on whether Indian officials are able to clinch a deal with Washington, which could potentially limit the impact of the 26% taxes on Indian imports. Studies show that if the tariffs remain, India will suffer billions of dollars in trade losses. Ishan Garg, CNA, New Delhi.